Good afternoon, everyone. Welcome to the last panel of the day. Last but not least, but we are going to answer the question, is LNG a commodity? This is an especially interesting topic for me, coming from Singapore, where I see a few familiar faces from Singapore here. We have seen an expanding LNG trading community in Singapore, and some would describe Singapore as already an LNG trading hub. But some may disagree. So is LNG a commodity, or are we not there yet? Today, I'm very glad to have 2 LNG suppliers and 2 LNG shipping companies here. So we know that LNG exports from US, being a flexible source of LNG, is going to be a catalyst in LNG commoditization. But besides that, we also need other players in the value chain to play a role to help LNG become a commodity. We need traders, we need liquidity, we need new infrastructure. So today, we have 4 panelists. First on my left is Frédéric, the CEO of Pavilion Energy. Next will be Pablo Galante Escobar, head of LNG Vitol. Third on my left is Støhle, CEO of Höegh LNG. And the last panelist, last but not least, is Wogan from GasLog, CEO of GasLog. To start off, I'd like to get each panelist to give their own take on whether LNG is a commodity in their view. If not, what are the obstacles? Who would like to start first? Maybe Frédéric?
Well, I'll start. At this stage, I think not yet. It's probably going to be a common answer, but there's a lot of drivers that bring us towards a commodity, but at the same time, we need to define what is expected out of being a commodity. 2 points. First one is, if you are stuck net long or net short with an LNG position, you cannot clear at the most, I guess, relevant index, which is the GKM price. So physical balances is not really done at GKM itself. Therefore, the cost of the bid-ask, as we used to say, of entering and exiting positions is too wide for it to be a liquid index. The second point is, as of today, there is still no true pricing of LNG and of the flexibility of the LNG in terms of destination. GKM is an ex-ship index that does represent some flexibility and does represent some of the markets, but it's not sufficient at this stage. So just these 2 points to start quickly the debate.
Thank you. Would other gentlemen like to contribute?
Yes, I have a bit of a different view on it than Frédéric. I believe that LNG has become a commodity. Obviously, is still a commodity which is in the process of developing. But during the last 12 months, we had almost 200 million tons of LNG traded. Of those 200 million tons, around 70 million tons were on derivatives, on JKM. And close to 130 million tons of physical LNG was traded. But beside that, we had probably 3-4 times more than that traded on the European benchmarks, and quite a lot of that was as a hedge for LNG. LNG into Europe has a very perfect market now. There is excess regasification capacity, so we saw that this year with more than 35 million tons against last year going into Europe, obviously in an oversupply market. We expect that to be even higher for next year. We believe then we're going to have a growth which is going to be on top of what we have had, probably another 10-15 million tons, and Europe at that point may get constrained. But it has developed in a way that you can trade in a liquid way LNG. Of course, it's still developing, and we believe that 2 things are required to get into a full state of commodity, and one quite important is the standardization of contracts. It's not easy because still all the different users will have a different requirement on the specifications that they need. And the second one is the maturity of the paper market. We're trading now, as I mentioned, close to 70 million tons of JKM, which is around 25% of the production in a year. On crude oil, we trade close to 20 times the volume on daily basis that is produced per day or per year, whatever measure you want to take, is 20 times that ratio. So we still have a long way to go. However, we have had growth of close to 350% year on year since I joined the LNG, which was in 2016, up to now on JKM, just to take one measure. Probably is higher than that on physical LNG and probably higher than that on the European benchmarks as an instrument to hedge physical LNG as well.
Okay.
Yeah, of course, as Höegh LNG, we provide floating LNG import terminals. We don't trade LNG, but obviously we follow that very closely. So I think from our perspective, being on the, our service is to service the companies that import the LNG. Certainly what we have seen is that, no, the market is not completely commoditized, but certainly it is going there, and I believe going there very quickly. And the most important change we see is that the buyers tend to now be very comfortable with the fact that they will be able to buy LNG in the shorter term market, in the spot market, in the longer term market. They have options. And that, for me at least, shows a much, much more liquid and dynamic market than what you saw only a few years ago, which I believe is what we all want to see. And when the market is growing with 10% a year, this year I think we'll probably end with a growth which is probably more than 10% a year. You know, this market will get there, but it's not quite there yet.
So I think we're all in massive agreement here, unfortunately. Is it a commodity now? No, I don't think it is. Is it moving that way? Then yes, I think it is moving that way. You know, from a shipping point of view, so we ship the molecules. If you look back, if you go back to 2000, there were around 40 country-to-country trade routes. Fast forward to today, there are probably over 300 country-to-country trade routes and going on for 900 port-to-port trade routes in LNG. So it's becoming from a sort of very marginal, sort of regional basis to a very much a global market. And I think what you're seeing with that is it's helping to then balance out the pricing of gas around the world. And so what I think will happen very quickly is you'll move away from an indexation that's against oil, which I think is holding it back from being commoditized, into an indexation which is, or a pricing discovery which is based on gas. And I think once you start to get to that, then I think you'll see the commoditization taking place much quicker.
All right, thank you. Picking up on Pablo's point about standardization of contracts, recently we have been seeing increasing use of electronic platforms, used either for LNG trading or for price discovery. And the traction has been a little slow, but we are starting to see new players offering such services to improve the efficiency of LNG trading, rather than for a seller to call 20 customers in one day. So could that drive standardization of contracts, do you think?
Well, definitely yes. I mean, the market can only benefit from standardization of contract, and the electronic platforms are one of the ways to do that. Today, they are still mostly standard. I suppose it's not so much a standardization of the MSPA or the SPA, it's more having some generic terms of trade on the shipping side as well as on the trading side. So definitely that is something that will help. Whether the platforms in themselves will be successful, on our side we are extremely supportive because we are traditionally supportive of increased liquidity, increased price transparency and visibility. So whatever we think we can do to support either through financial investments or through putting trades or even ships into shipping capacity, into specialized platform, we will try to do it to the extent of the depth of our portfolio. Definitely, yes.
Right. Unlike US or Europe, where there are already gas hubs which are widely used, but in Asia, we don't really have a price index yet. We have, someone mentioned JKM, which is the Japan-Korea marker, which is published by S&P Platts on a daily basis. However, it is still not an index that's used for long-term contracts. Do you see that, how long would it take for LNG to emerge from the shadow of crude, pricing against crude? And could we see a credible index emerge in Asia first, or could it emerge elsewhere, maybe the US Gulf Coast on an FOB basis?
It has already emerged, and we already have some long-term contracts on JKM. I believe that we announced as Vitol the first long-term contract based on JKM with Tellurian.
Yes.
15-year deal, which of course is subject to Tellurian being developed, which we very much believe that is going to be the case. It's one of the most attractive projects which is around. However, Total after that, they follow as well with a similar deal between themselves and Tellurian. And we believe that other projects already have term on JKM basis. So there are perhaps projects from Canada which may have term on long-term basis on JKM. So it is becoming something that is more prevalent. Of course, that's for the banking side to say if they're going to accept JKM deals to finance projects. The only reason that LNG is traded on crude is because the banking community demands that. But it's not very usual to trade one commodity pricing on another basis.
Yeah.
I think the main reasons for energy pricing is essentially to display the value of flexibilities of those cargoes going anywhere in the world. Otherwise, you're pricing gas as per the destination market. So definitely there is potential for an FOB index in the US that could even become a futures market. When you have 60 million tons of purely flexible LNG, mostly in the same location, so very limited basis risk. Growing to 100, maybe 150, if I listen to some of the numbers this morning, there is definitely room for something there.
Right.
Talking GKM, yes, it does represent value in Asia. Some contracts are there on mid-terms, potentially long-term, start to be indexed on that. It is still terribly illiquid when you want to hedge, and that's where we probably have different views. In Pavilion Energy, I mean, even before the acquisition of Iberdrola assets, we do represent about 5 to 10% market share on the paper GKM, and that is way beyond what we do represent in the physical market. So the paper churn that we have, either through the optimization of our portfolio globally or through our hedging and risk management activities that we provide to third parties, that is giving us a lot of activity in the GKM. And frankly, when you want to execute hedges in the paper market, you still have a lot of execution risk, and you still have a lot of sweat over a few days, so that effectively you can properly hedge or translate a pricing index, a Brent index into a GKM position, and etc. So that still takes, but I think all the seeds are here for that to expand exponentially as fluidity and flexibility in the market has been growing and is growing.
Right. Thank you very much for pointing out on the long-term JKM contracts. I believe Vitol is one of the off-takers which have signed up for a JKM 15-year contract. But what is unique about the 3 long-term JKM link contracts signed so far is the off-takers are not the end users. They are not the Japanese or the Koreans or the Chinese buyers. They are traders like Vitol and trading houses or portfolio players. What is the views that you are hearing from end users? Maybe Frédéric can shed some light since you are from Singapore. Are buyers still not comfortable with using an index like JKM to price a long-term, even if it's a 10-year contract?
But, I mean, see, from my point of view, is that really an issue? Isn't the issue is that the different buyers have different ways of handling their risks, and if they can lay off some of the risk on some of the traders, or they're more comfortable with that and buying from them, that's the way the business works. I mean, it's. I don't think you will ever get to a situation where everybody perceives or looks at the risk in the same manner. So this is all about managing your risks.
Mm-hmm. Anything else you'd like to add, Pablo or Frédéric?
Well, I mean, let's not totally discard oil indexation. We heard this morning the largest supplier, quite comfortable. As buyers, we are not totally negating oil indexation. And in fact, over time, you see that where you used to buy LNG at some point at 14-something%, now you're buying it at 11-something%. And that reflects the value of LNG. You still have Brent, but you have a percentage that effectively varies, and when we swap formula, it's the same. So that does represent somehow the value of LNG. The problem is having that for long term and then having major discrepancies that used to be solved by price reviews, and now it's more solved by having shorter term contracts or pricing adjustments that are slightly different. So the whole framework of contracting is changing. It's not fully settled, but we are not rejecting oil indexation. It used to be in Singapore that it was in competition with the pipeline supply, so which providing a good reference framework. More and more we see this sort of spot gas, even in a small market like Singapore, being influenced, or in Spain being influenced by LNG pricing. And in those markets where you don't have other ways to balance the market that to bring or take out LNG, and LNG is providing the balance of the market, then therefore that calls for much more flexible pricing indexation and much more flexible supply scheme, contracting.
So we talk about JKM paper trade has increased quite significantly in the last 2 years. Are there other hedging tools that the industry need to help them hedge even better?
I agree with what Frédéric said, that the US needs eventually to have its own benchmark, or LNG. As we heard before by Mr. Suki, we are going to 100 million tons in a few years, and probably in 3-4 years, and probably 200 million tons if some of the second wave projects are developed. And those are very flexible molecules sold on FOB basis with a very wide access of different players who have those. So it has all the ingredients to be quite a liquid market. That's definitely one which is going to be developed, and the other one is on the freight side. And we believe that, as in other commodities, a futures market for different freight routes will be developed. We recently traded in Vitol with Jera, the first Atlantic route, and we believe that this is something which is going to continue to increase, and hopefully we can add to the liquidity.
I think someone mentioned this afternoon about the characteristics of LNG is rather unique compared to other commodities because it's very hard to store. It's not like oil, which is easily stored. And in oil, we have many independent operators which rent storage tanks to market players. But in LNG, buyers tend to build their own tanks and build their own regasification terminals. Do we have enough? Do you think we have enough storage there in order to help LNG to become more easily traded freely? We see that some LNG FSRUs or LNG carriers are being used for storage purposes, sometimes for capturing the winter arbitrage plays. But do we need more storage in order to help LNG become a more freely traded commodity?
If I can, first on the point that LNG buyers, they own their own storage. Not necessarily so. Yeah. Because for FSRUs, we own the asset. We lease out the floating terminal. They control the storage, but we still own it. Is that an issue? No, not at all, because what's important for the people importing the LNG is that obviously they have full access to the services we provide, which is the regasification and the storage. So, and to your second point on, is there enough storage? Well, you need to think about LNG as part of the natural gas market. LNG is natural gas. And obviously, a number of places there's more than enough storage for natural gas, and other places there's probably not enough. And I think a case in point there is definitely the fastest growing LNG market in the world, which is China, where there's very, very sparse storage for the total natural gas market. And in actual fact, LNG actually is the only real storage they have. So there's definitely a need for more storage. And hopefully some of that will also be in the form of floating solutions. So we actually have the only FSRU in operation in China. And I think we see that the flexibility that the floating solution provides is being appreciated in certain markets, and especially to take the large swings, either in the summer or in the winter. So overall, I think, in order to develop a market and be able to deliver on all the services, depending on the seasons, storage is extremely important. And in a number of markets, that definitely there's not enough.
We've just done a similar thing in Panama. We've just signed a 10-year deal on one of our ships where we'll convert it into a floating storage unit. So there's huge flexibility in terms of the ships that we have out there to be able to put storage capacity in very quickly where it's needed. So I think, as we start to see this LNG market developing, my guess, my bet is that you'll see a lot more of floating storage and the use of, especially ships like the steamships, where they're not as competitive as the modern ships in terms of their speed and consumptions, being taken and used for storage. And that gives you great flexibility, I think.
The point on storage is quite critical. So the question is really relevant to the market. In Asia, where we expect most of the growth of demand, you have very little storage. On top of that, you don't have a policy of strategic reserves like you have with oil storage. That's not mandated at intergovernmental level. And therefore, if you look at from 10, 15 years ago, the panorama in Asia in terms of storage versus throughput, so market size versus storage, and the equivalent of days of storage that is provided to us, you are in a very tense situation in Asia. Because most of the developments might be FSRUs or might be small terminals with 2 tanks. But the markets behind that, China, India, they don't have much gaseous storage like we do have in Europe, for example. So the gas or the LNG storage, and you cannot really store too much on LNG, whether FSU or onshore tanks, you have a few days spare capacity, but not that much, not 30 days or etc. So the storage and the hardware strategy is absolutely critical. So in Singapore, we have 800,000 cubic meters of storage for a market that gas plus LNG is 11 million tons, so that's much more in excess. And we will invest in more storage, essentially because we believe the flexibility that is required to balance all those markets cannot just be provided by the shipping and the flexibility of the LNG molecule coming out of the US or Qatar or Russia or Australia. It has to be provided by buffer in the markets. And today those buffers are very, very limited. Therefore, we'll invest in storage. We'll invest in storage and in delocalized storage, meaning that in Singapore, we'll also break bulk large ships and resend across the markets in smaller ships so that effectively we can have a more flexible offering benefiting from a storage position and be more competitive or offering more flexible terms. So that's the way we see storage, not just as trading place, summer, winter, but providing, and that's one of the things that is mandated in Singapore, as you know, is to reserve access for strategic storage or strategic call on storage and throughput to make sure the market is reasonably secure and well balanced.
All right. And to help LNG commoditization, we need new markets to emerge, not just the traditional buyers in Europe or Northeast Asia. This has been aided by cheaper and faster FSRUs in the last few years, such as Pakistan, Bangladesh, and Middle East as well. But there has also been a slowdown in the deployment of new FSRUs. Maybe someone could share some light. Can you add some color on what are the conversations like with these emerging markets?
Yeah, sure. Thank you for that question. I believe it's the main reason I'm here, so I'll try to do my best. Obviously, the FSRU market is not immune to cyclical effects. So it's true that for the last couple of years, the market has been a bit slow. At the same time, there's been installed, I forget, 7, 8 new FSRUs in the last couple of years into new markets. So I think there's something that has been mentioned a number of times today, and that obviously has to do with the fact that the price of LNG has an immediate effect on demand. I mean, this is the way any market works. And certainly when one sees that the likelihood of the gas being available at a very affordable price for the next 5-10 years, depending on who you ask and what kind of forecast you look at, this also means that people will start looking at making decisions on putting new import facilities into place in order to take advantage of the fact that the gas is there or the LNG is there. And if you want to be able to import LNG tomorrow, 3 months from now, not 3 years from now, obviously the FSRU is the best solution. So there was definitely a clear demand reaction in 2018. I believe there was awarded 8 or 9 new FSRU contracts. That's the highest ever. And most of them were into markets that previously did not import LNG. So clearly, if you look across the LNG space today, there's 25, 26 FSRUs in operation around the world. Of those, we have 7. If you look back 10 years, there wasn't a single one. With what's in the pipeline, there will definitely be, for the next 3-4 years, there will be somewhere around 15, 17 new FSRUs added to the market. So I believe that the prospects are very good. Obviously, some places, FSRUs have been used for a shorter period of time. But most of the places where, like we did, we were in Egypt and we left. Why did we leave? Well, they had the good fortune, and all the best to Egypt, of finding a huge gas field. And in that case, they no longer needed the FSRU. Is that a problem? Not at all. That actually shows you how flexible this solution is. It can go to a new market. It can be traded as a ship. And I believe also that's why we see that the market keeps growing. So where do we see the new prospects? We have, in Höegh LNG, we are installing 2 FSRUs in Australia. We will install the first FSRU in India, end of this year. We see across Southeast Asia, Vietnam, Philippines. There will be more FSRUs in Pakistan. There's already 2. There will be a number 3, a number 4, and number 5. In Port Qasim, there's no place to build a land-based facility. Very simple. The only way to get the gas into the country is to do a floating solution. So I think the prospects, despite the last couple of years being a bit choppy, I think the prospects are looking very good. And the main driver is obviously the availability of gas at a very affordable price. Then to the main theme everybody's talking about, it's replacing oil products and coal with natural gas. And that trend, as you all know, will only continue. So I think that for our business, with the way the world is looking, things are looking very good.
Maybe I'll just add to that. We also have an FSRU project that we're invested in developing in northern Greece. I think Sveinung's exactly right when he said that the pricing gives the signal, and people then say, we want to move quickly. The problem with the FSRU is that the price gives the signal very quickly, and then actually getting the project up, getting it in place, getting the permitting, getting everything there, takes a longer time to do it. So you have this sort of time lag, I think, between the price signal, where people want to get it, and then actually putting those projects into place. And I think that's what we've been seeing over the last kind of couple of years. But certainly, I think I very much share Sveinung's view that with the pricing we're seeing now, and with a view that we will continue to see very competitive LNG pricing going forward, I think there'll be continued views on getting LNG in, be it land-based, but also, I think, through FSRUs.
Right, thank you. Next, if LNG is to become a commodity, I believe the transport sector, especially LNG bunkering, should become a key part of that change as well. And with the IMO rules on sulfur kicking off in 2 months, less than 2 months maybe. So what is your view on when can we see LNG bunkering taking off in a big way? What are the decision-making processes like when you speak to potential clients on LNG bunkering?
Well, I think generally, just talking about the shipping industry, so you have the IMO, the International Maritime Organization, shadowing what's been happening with the Paris Accord and saying we want to decarbonize shipping. So if you look out to 2030, what they're saying is we want to be 40% less carbon per ton mile than we were in 2008. The only way you get there is by a combination of slow steaming and using LNG as bunkers in new ships. That gets you there. Now, moving out to 2050 and the targets there, you need to do some other things. But if we're serious as a shipping industry about meeting those targets, we better start using LNG in a much bigger way than we have been doing for the fuel. So that, as an industry sort of push, I think is something that we're certainly pushing very hard. There's a big global maritime forum in Singapore coming up in a couple of weeks' time where that's going to be one of the big topics. But I think there's huge potential there for LNG as a bunker fuel.
Right. One of the questions that people often ask is, how do you price LNG bunkers? Do you price it against the LNG price, or do you price it against...
discount to marine fuels.
Yeah? Okay, is that what you are doing?
I mean, at this stage, we see it's mostly about investment and conversion of the fleet. So it is still in a perspective of a mid or long-term securing supply at a competitive rate versus conventional or low sulfur bunkers. So it's very much LNG versus oil or discounted oil. We do also see some hedging happening as well in sort of GKM versus oil formulas for the ship owners. But I truly expect that when that phase is sort of passed and we are into the operation part of LNG bunkering, then it will help having local indexes to emerge. Because you're not doing the same job as selling a big ship or several big ships over 20 years or 15 than you are doing for selling a small bucket of LNG for next week. And so the whole contracting, the whole terms and conditions, the whole operating, and there are a lot of works on operations on bunkering, LNG bunkering. And in Singapore, we're quite active and proactively investing into that. The whole framework of managing LNG is much different. It's no more the LNG of the large scale LNG that we know, and all that will contribute to liquidity, to pricing, more local pricing. That will emerge and will be most likely fixed price offers with online platforms, which will then the customer, the ship owners will be able to purchase the LNG that way. So that's the way we are going, definitely.
Claire, can I add just one small comment? I think if for LNG as a marine fuel, and with the IMO 2020 regulations coming in, we in Höegh LNG, together with Stolt-Nielsen and Golar LNG, set up a new company exactly 1 year ago. We had invested $300 million in Avenir LNG. We have ordered 6 bunker-ready small-scale carriers. We are building a small terminal in Sardinia. Small scale is going to be a huge, huge part of the LNG industry going forward. We are extremely bullish on this because we simply see that with the transition from using oil products to fuel small power stations in all the islands around the world, they all run on oil, by the way, that needs a new approach, and the new approach is small-scale vessels, terminals, and for that you need to be able to basically go to terminals, pick up small cargoes and go and deliver to the market, or go to FSRUs and pick up small cargoes and go to the market. This, with the driver being very affordable LNG, LNG today is basically going to replace oil in all these markets. And for that, the industry needs to build all this infrastructure, and it's being done. So that is something that I think if you haven't looked at the small-scale market, have a look at the projections. They look extremely, extremely positive.
So if LNG trade is to become commoditized, what about LNG shipping? Could we see a scenario whereby it will be so easy to book a LNG ship? Do we have enough ships on the horizon, and are freight costs falling as quickly or as fast enough, such as we could call an Uber, like an LNG carrier?
I think if you look at shipping, if you go back 12, 15 years and you built an LNG ship, it was a steam vessel, 180 tons equivalent a day, 0.15% boil off, if you're lucky, from the containment system. The ships we're delivering out of the shipyard now are about 100 tons a day, so 180 to 100 tons a day, boil off from 0.15% to 0.7%, and we're putting reliquefaction on, which actually brings that down to more like 0.03%. What does that do? That means that your delivered cost of your molecule into the market has dropped by somewhere between 60 and 80% over that time. So I think shipping's done a huge amount of work in terms of trying to make itself as cost-effective and as efficient as possible in terms of getting those molecules into the market. And one other quick thing. When you talk about storage, if you think about that ship with that type of boil-off, it actually allows huge flexibility to the traders in terms of being able to store the cargo for a long time and do that cost-effectively and therefore be able to trade it. So I think both those things are helping in the commoditization of the market. And I think provided we owners get paid well enough for it, we're very happy.
So we have a little bit of time left. Could I ask if there's any questions from the floor? There's one here. Could you introduce yourself?
Hello, my name is John Roper from Uniper. Just an observation. With marine bunkering, do you see it as an import solution whereby vessels top up import, or do you see the opportunity for shipping lane bunkering, where storage vessels are waiting to fill up the marine fleet as they pass by?
Well, at least the way we approach it, I think you'll see both. Because it depends on the shipping segment. Some type of ships, like container ships, they follow strict routes, and then you need to bunker either only once, because you can do the whole route, or you bunker when you leave and when you have delivered the containers when you go back. So for cruise vessels, they also follow more or less fixed routes. Otherwise, you simply need to be where most of the ship come in and go out. So I think that for at least the way we look at this in Höegh LNG and through Avenir is we have to be very careful where we want to compete, because obviously this business will go to some of the big companies at some point in time. We think that we can be competitive for certain markets, but others, I don't think that's very likely.
Thank you. I think our time is up. I would love to take more questions, but we have no more time for that. So I'd like to thank our panelists, our discrete panelists, for their views and thoughts. I think we have learned a lot from them today. Thank you.